Welcome everyone. In today's video I wanted to talk about all of the important stuff that happened in the Solana ecosystem last week, and the first item I wanted to talk about comes from Wormhole. So the Wormhole network was exploited for 120k ETH, and that's roughly about $320 million. So this is one of the largest exploits in DeFi history. I think it might be the largest in terms of like the money hasn't been returned yet, because Poly Network in like August I think was hacked, but all of that money was returned. But for the Wormhole exploit, none of the money has been returned yet. So I think this might be actually the largest one. So Wormhole is a bridge to Solana, so you can bridge to Solana from like Avalanche, Polygon, Ethereum, Terra. And so they were exploited, and they put out a little incident report. So I'll just read you sort of the TLDR of this. So on the 2nd of February 2022, a signature verification vulnerability in the Wormhole network allowed an attacker to forge a message from the Wormhole Guardians to mint 120k Wormhole wrapped Ether. The attacker then bridged 93,750 of these tokens to Ethereum and withdrew the unwrapped ETH. So one of the investors in Wormhole actually recapitalized the contract with 120k ETH to ensure that all Wormhole wrapped Ether on every chain is fully backed. And the next item comes from Phantom. So Phantom for iPhone is finally here. Thank goodness, because I've been trying out a lot of these Solana sort of mobile wallets, and I've not had that much success with them, meaning that like the user experience wasn't that nice and I wouldn't really recommend them. So you can get Phantom for iPhone. You can go to the Apple Store and download it. So I don't have an iPhone, so I've not tried it out, but definitely go ahead and check it out if you want to start doing DeFi or NFTs on the go. And now we have a tweet from Tulip. So Tulip V2 is finally here. So you have new strategy vaults. So if you come to the Tulip website, go to strategy vaults, you can see here the vaults that they have. So essentially what happens, so they have this USDC vault here. You deposit USDC into here, and then Tulip will shift those funds around between Tulip, Solend, and Mango markets to get the highest yield possible for you. So I've talked about Accrued Finance before. They did something similar, and it looks like Tulip's looking to do something similar as well. They also have a Radium vault here, which is currently getting you 76.23% APY. The USDC one's roughly about 5.42%. But, you know, if you're active in the DeFi space, and you can easily find higher yields than 5.42%. But, you know, if you're not terminally online and you just want to sort of like take the lazy approach, then you can just deposit your USDC into one of these vaults. Just note that the vault takes 5% of the accrued interest. So you won't exactly get that yearly APY number, and this yearly APY number will, you know, obviously shift around anyway. Now the next item comes from Solend. We got quite a few things to talk about here. So the first part is that they're announcing the launch of cTokens. So you can mint and redeem cTokens at solend.fi/cTokens. So essentially what they are yield bearing deposit receipts. So it means that you can convert USDC into cUSDC to get a tradable token that earns interest through Solend. So you can hold this token in your wallet or send it to others, and it will continue earning interest. So cTokens open up a world of possibilities for developer integrations, and since cTokens are just SPL tokens, they're incredibly composable. So we'll probably start to see more things that you can do with cTokens in the future. I mean, they're just new now, so obviously there's not much you can do, but I imagine, for example, you might be able to take your Solend cTokens and then use them as collateral to trade against on Mango markets, or you can further collateralize these cTokens in other lending and borrowing platforms. So that'd be really cool to see. So this is what the interface is going to look like. So there are various different cTokens you can you know, receive right now. I think the highest yielding one is your Ray cTokens. But yes, USDC, you're getting about 5% APY, USDT, about 5.42, and UST is getting about 7% APY, so that's pretty cool. And we've got more from Solend here, so they're launching Isolated pools. So the first isolated pool is Turbo Sol. So let's talk about this, right? So isolated pools are separate lending markets which act like a quarantine for risky assets, preventing issues from contaminating the rest of the protocol. I think I've spoken about this in one of my previous Solana update videos, just talking more in depth about isolated pools and why they might be needed. So essentially, if they introduce isolated pools, it means that they can list riskier assets, like say Samo, for example, or some random coin that has recently been launched on Solana mainnet. If you isolate them out, even if they get exploited, it means that the rest of the protocol won't suffer. We've seen that Cream Finance listed a ton of exotic collateral, and it led to them getting exploited 3 times, and the last exploit was for over $100 million. So that's why most lending and borrowing marketplaces, well, most money markets like Solend, don't allow for this exotic collateral. But with isolated pools, it sort of solves that, right? So Turbo Sol is their first isolated pool. So it has just 2 assets, Sol and USDC. So the loan to value ratios are cranked up there, so you can get up to 98% value of the Sol that you deposit as a loan. So if you deposited $100 worth of Sol, you can borrow up to $98 worth of USDC against that Sol. So previously, I think the LTV ratio was 75%, meaning that you could only borrow $75 for every $100 worth of Sol that you deposited. So that's really cool, and that means that you can be a lot more capital efficient with any Sol that you deposit into Solend, and it sort of helps cement Solend's position as one of the more dominant money markets here on Solana. So the next tweet I wanted to talk about comes from Solana itself. So on their page, they're announcing the Solana Riptide hackathon. So this is an online hackathon with $5 million in prizes and seed funding. So we have various different sponsors here. Visa's sponsoring it, Google, Samsung, TSM. So some companies that aren't necessarily Web3 native are actually going ahead and sponsoring the Solana hackathon, which is really cool. I mean, the Solana hackathons are legendary. We have seen many of the major players in the Solana ecosystem come out of these hackathons. And now onto Hubble protocol. So this went live on mainnet a week or 2 ago. But what I wanted to talk about is the stability pool here. So you can deposit USDH to earn liquidation rewards and HBB emissions. So when liquidations occur, you earn all of the collateral liquidated users. You earn all the collateral of the liquidated users in exchange of paying their debt. So essentially, you can take USDH, which is the Hubble stablecoin, and then deposit it into the stability pool, and you can currently earn 83.14% APY, and most of that is coming from HBB emissions. As you can see here, the total liquidation rewards haven't actually been that much, but that's ultra high yield on stablecoins. So if you're interested, definitely go ahead and check out Hubble protocol. Now let's talk about 01. So 01 is a perpetual futures DEX here on Solana, and they recently listed Ethereum and Terra perp markets. And to just round this video off, we're going to take a look at Drift Protocol, and they've listed Algorand markets. So if you're interested in trading Algo on Solana, then you can trade the Algo perps here, and you're currently getting paid about 100% APR to actually go long the Algo perps. So if you're interested in that, definitely go ahead and check Drift out. So thank you for watching. I hope you enjoyed this video, and make sure to subscribe for more videos like this one.